So, what a sharp sell off we have seen transpire throughout Monday's trading session. The Dow Jones Industrial Average down over 320 points, the S&P 500 down very close to 45 points, and the Nasdaq closed down over 122 points. We are sitting on the knife edge of a potential market breakdown. As you can see, since March 2015, we have held this support level on 8 occasions. Here we are retesting this very same level for the 9th time. If we get a definitive close below this lower level, about 17,580, give or take a few points. My trigger here is 17,550. Expect this market to shake on down to 17,237. As it stands right now, the likelihood of a Greek exit is becoming more and more likely. We will get that definitive answer or that definitive response as at the close on Tuesday. But for all intentions right now, it looks as though the bailout relief will be pulled, and Greece is in the process of actually defaulting on their debt obligations. If this is to be true, we can expect some turmoil or further turmoil moving into the week, especially around the Eurozone. That is going to trickle through to the US markets, and it puts up a very nice argument, at least, that if we can get that movement below 17,550, if we can break below the swing support lows since March 2015, well then first of all, we're looking at that target at 17,230. And of course, this is what we've been speaking about over the past 3 weeks in pro, this primary trend line, which hasn't been tested since late 2014. That is still quite a long way away. It actually comes or falls below our first target, more so around that 17,000 level on the Dow Jones, and that is still over 622 points away from where we are currently trading. If we have a look at the S&P 500, again, we closed down very close to 45 points. This has got somewhat more of a nicer support level. You can see if we pay attention to the March swing lows, they are somewhat lower or quite well a ways away from where the Dow Jones Industrial Average is closing. However, we did get that move below 2,064. I'm really paying attention to the Dow Jones Industrial Average, but for all intentional purposes, the S&P 500 is extremely bearish. Just have a look at the daily candlestick, of course, of how it's set up as at Monday. Now, expect volatility to continue. We may see some form of a short-term rally back up to 2,075, give or take, but expect this market to make the natural correction as low as 2,000 or 1,991 over the coming weeks if we get that definitive close below 2,038. At the moment, we're inflicting serious technical damage. So all of this technical damage which we have been speaking about is actually starting to materialize as we are breaking below these swing lows. We want to make sure that we get that definitive close and hold below, and that's really going to usher in the second wave or the second leg of this downward type of price action across all three markets. What I'll do right now is speak about the Nasdaq, because this has got a really, really strong bearish gap. The difference between the open on Monday and where we closed at Friday was huge on the Nasdaq. A huge volume spike as well, which hasn't trickled through into my live update yet, but it will. I know there is a considerable volume spike on the Nasdaq. The candlestick itself is just extremely bearish. The chart pattern looks like some form of a rounding top. We were very close to breaking out mid last week around 5,169, but just look at the difference. If I put this into perspective, that is just going off an absolute cliff. We are starting to break below support levels, which were once resistance for the better part of 3.5 weeks. All of these signals are indicating that markets are finally going to see that correction, that long-term correction which these markets have really needed since late 2014. We haven't seen a 10% sell-off or correction since 2011. Here we are halfway into 2015, about to start the second half of 2015. And it really looks as though for a lot of these markets that we are simply going to come back down and retest the primary trend levels, which have been established and have been in effect since 2009. That's all we're really looking at this particular moment in time. We'll see what happens if in fact we do get down to these levels again. I'm pointing it out for you right here. 17,300, give or take 17,000, even the psychological round number right here. This is where that primary trend level will support the markets. And then we'll have a look and we'll see whether these markets can rally and establish a new all-time high, or whether we start to set up some form of a right shoulder. At the moment, there's a lot of talk and discussion, a lot of dialogue behind, well, is this some form of a head and shoulders chart topping pattern? Maybe it is, maybe it isn't. Ooh, that will become a lot more clearer in maybe 1 month's time. But right now, however, you need to be very, very cautious with this market, especially after Monday's price action and what may continue further into this week. We still have another 4.5 trading sessions. Friday will be closed for half day in observance of the Independence Day, public holiday taking place on Saturday the 4th. So keep that in mind, but we do still have another 3 full trading sessions to really see if this market can shake loose below these support levels. At the moment, a lot of bullish trades, which we spoke about last week, have been stopped out, and we are starting to position ourselves into some short trades. When I mean short trades, I'm talking about Netflix. I'm talking about, let me just go through these right now. We also have, pardon me, it was the Caterpillar. No, it wasn't the Caterpillar trade. Baidu trade, that's the one which triggered today. 204 was the entry. Here we are at 250. We had a nice gap down. Still really nice trade set up, looking for a target at 191.12. Netflix today, we spoke about that island reversal chart topping pattern. We got that first movement below 648.50. We thought we would see a gap down. We saw that, but it is expected to see that push off from the lows when you open down on such a lower open. Expect this to continue lower. Target is still 589.20. A really nice trade there. Outside of that, pay attention to these markets. I mean, if we can just shake this market loose, it'll go a long way as to establishing more so the intermediate structure of this market moving forward. The primary answer, or the primary movement of the market, will be, I guess, answered when we come back down to the support level and to see what happens at this support level if in fact we do sell off that low. I guess right now, however, we just need to move with the daily ebbs and flows of the market, and we'll see what the price action tells us. Unfortunately, however, it does look, and this comes at somewhat of a surprise, I did believe that there would be some form of short-term relief to this whole Greek debacle, but it really looks as though that this is going to be the last straw, and that they're in the process right now, going through the writings on the wall, so to speak, that there actually will be a Grexit coming as at the close of the month of June. I mean, the end of Tuesday. I mean, June 30. I mean, that's it. It really looks as though, and markets are preparing for some form of a default, which will happen tomorrow. So I'll keep you updated and what the markets are suggesting, but it doesn't look too good as at the close on Monday. All the best traders and friends right around the world. It's James signing off on behalf of Pivot Point Trading. Goodbye.